Curious about the latest crypto news and which companies and tokens have actual real-world utility? Stay tuned.
Welcome to a Wiser Retirement Podcast, where we cut through the noise and bring you real, honest conversations about investing, retirement, and building lasting wealth. No sales pitches, no gimmicks, just insights to help you stop guessing and start planning your financial future.
Welcome to a Wiser Retirement Podcast. I'm Casey Smith. Today I'm joined by Robert Swarthout, owner and founder of Teton Crypto Capital, to discuss the latest in crypto and what are some real uses for it. Before we get started, we have a book coming out. Not Robert and I. Robert, you should write a book.
Yeah. I have no patience to do that.
So Shauna, Andrew, and I put together a book called Everything Your Financial Advisor Won't Tell You. It comes out June 10th. You can find it anywhere you can buy a book online, specifically Amazon. We took over about a year and a half to put this book together, mainly just to talk about what real financial planning looks like. And I think this is a great book to give friends and family, people who are thinking about maybe a second opinion or just want to learn something about finance. We kind of wrote it with a little bit of everybody in mind. So if you have an opportunity to support us, please do that by picking up the book through Amazon. Everything Your Financial Advisor Won't Tell You. You can search under my name as well, Casey Smith. All right, Robert, I know you ordered 10 copies.
I believe you're doing an audiobook. That would be the way that I would listen to it.
Yes.
There
will be an audio version. There's a Kindle version. There's a hardback. There's a softback. We have what everybody prefers.
Yeah, chiseled into rock would be my preference.
All right. So let's talk about, we have on our list here, we have quite a bit of cryptos and companies that are in the digital asset space. And we thought it would be a great idea to go through this list and put the real world application behind each of these cryptos. Mm-hmm. I still think that people go and they hear about this digital asset stuff and they log in, they go to
Bitcoin.
Well, yeah, they all buy Bitcoin, but then they look at these others and it's like walking into a casino and all these slot machines and they go, hey, I'm going to bet on this one. I'm going to bet on this one. And I don't know. That's not really how any investing should be done with real money.
Correct. So
let's talk about some of these, and then we'll kind of round this whole conversation out with what's happening with legislation related to around this.
Sounds great.
First one on our list is Circle, or USDC.
Yep. So Circle's the company. USDC is the stablecoin in this case. They are a publicly traded company, and we should stay up front. We're not endorsing any of these.
Yes, correct. Thank you.
There's some great things on this list. There's some other things that are more early, and who knows how they'll turn out. But,
educational purposes only.
Yes, for sure. So Circle, they've been publicly traded for, I guess, 6-9 months at this point. But yes, they are the largest US based stablecoin. We have stablecoin legislation as of roughly a year ago.
The Genius Act.
The Genius Act, yep. And we'll kind of get to it. They're trying to make some changes to that. But at the end of the day, we have legislation. It's been moving forward. And stablecoins are really just digital dollars. In this case, USDC is actually a digital dollar. There's a digital euro in Europe and some other ones around the world. But Circle is, the whole idea is, if you hold it, it doesn't change in value like a token on a traditional crypto network may.
So again, it's backed by the Treasury. So this is not, not backed by this Treasury. Yeah, they buy Treasury.
Yeah, they buy Treasuries and hold them and other cash equivalents.
Yes.
And then in the Genius Act basically gave them a structure of what they could and could not buy. It's largely just straight Treasuries and cash.
So this is not something that you would buy and expect a run up in price like Bitcoin did. Or
no,
like that.
Some use cases for this may be that, you just want to be able to pay with crypto in your everyday life in places that do it. You don't want to be using a token that changes value because that coffee that you may buy today may be more expensive or less expensive tomorrow.
Right.
But I think more of a use case for stablecoins these days beyond payments is purely just if you're using decentralized finance in other parts of the blockchain and you want to park your money for the time being, you're not going to move it back to a bank account. You would move it into a stablecoin like USDC or Tether USDT.
So what has Visa done with the USDC?
Yep. So Visa's been doing some testing, and it's really cool because if you look at like the way credit card networks work, you charge a card and you think the merchant immediately has your money when you get your receipt and you walk out the door. That is 100% not the case.
Right.
It can take 24 to 72 or 96 hours in a lot of cases for them to get their funds. So what this is doing is really just speeding up the money rail there. So they can get their money the same day. We don't necessarily have it in these notes here, but some testing has been done with Uber and basically paying drivers real time, which can be rather impactful to those drivers because they are, especially the ones doing it full time. It could be a big deal. So it's pretty cool to kind of see.
Are they getting paid in stablecoin? Or are they getting?
They've tried stablecoin, and they've tried a few other networks. I think stablecoin only makes sense because it's like, there could be confusion around, Uber sent me so much in X cryptocurrency, but it's worth less now than when they said they sent it. Like, what did I really get paid?
Right.
I think the taxes get very confusing around something like that.
Yeah.
So there's still a lot to figure out. This is, we've said this for years, but it's still early days for crypto. So like taxes around crypto are still not super clean cut, especially when it comes to transactions, and they're trying to change that in some of this legislation. So.
All right, let's move on to Chainlink Labs and the Chainlink.
So Chainlink Labs is the company or foundation. Yep. Chainlink is the token. LINK is the ticker for that crypto token. So they're trying to bring different blockchains on-chain data, off-chain data and connect it with on-chain data and kind of be an intermediary, if you want to call it that. Another company doing this is Quant. QNT is the token there, kind of a competitor to Chainlink. But they are really just trying to bridge the two worlds because it's really two different universes. Obviously, the off-chain world is much larger than the on-chain world currently, but over time, I think that kind of morphs. And pulling them together allows you to use off-chain data in ways through a smart contract and a blockchain to automatically do things is one of many examples we could talk about. But it could execute a contract automatically versus having to have someone decide, so-and-so has fulfilled their responsibility and now send a payment, for instance.
So how did UBS Asset Management use this?
They tokenized some secondary fund. I didn't read tons about that one, admittedly, but at the end of the day, there's a lot of experimentation. Chainlink, we'll talk about securitizing in a minute, who's really helping different people do it, but basically taking secondary funds, tokenizing them on the blockchain and making them tradable and making a market out of them, really, because in a lot of cases they're rather illiquid and bringing more visibility and liquidity potential.
All right, next one is Stellar Development Foundation for Stellar token.
Yep, Stellar token. And the next one after that we'll talk about is Ripple. These two are married at the hip at some levels because they have a common co-founder between them. Ripple started first. XRP started first. There was some disagreement. He left, started Stellar, the Stellar Foundation. Took the code base of XRP was public, and he copied it to make Stellar. So they're focusing on cross-border payments in more of a third world country, and like helping poorer countries kind of have a banking system versus some other use cases that we're going to talk about for others. But it's cool to see. I mean, it's these tokens that have a lot of drama around them. I think at some point they have trouble marketing. This is one that I think is the case. But they helping. We have notes, things in our notes here about how they're helping get funds into Ukraine for the people affected by that. So it's more of a, I wouldn't say assisting charities, but something along those lines kind of token.
All right. You said it was kind of attached with Ripple.
Yeah.
So Ripple's next.
Yeah, we've talked about Ripple many times.
So that's cross-border payments.
Yeah. So Ripple, the company, XRP, the token, which they're using, they also have their own stablecoin now, and they also use USDC. Before they launched their own stablecoin, they were 20 to 25% of all volume of USDC being of minting volume, I should say. So, But yeah, Ripple aims to do many things, but in this case, they are doing cross-border payments. They focus specifically on businesses trying to solve problems. They're not a retail-focused company at all. And we talked about years. They went through the lawsuit with the SEC. Came out that on the better end. Pretty crazy story there, but they have. They try to do cross-border payments. They're trying to do custody for corporations and banks. They have a prime brokerage that they purchased now. It's called Ripple Prime. That is connecting the traditional finance with with the crypto world. And just generally, they've used for a year or so now the analogy that they want to be the Amazon of crypto. At first, it was like, well, you do one thing. What does that mean? Well, Amazon was a bookseller. And now they do lots of different things. So we'll see how that one plays out. But they certainly are at least attempting that strategy.
Okay, let's talk about Securitize.
Yep. Securitize, if I'm not mistaken, is based here in Atlanta. So little hometown shout out here. So they're a software company that is helping generally banks and other, financially regulated companies basically create electronic or crypto versions of their funds or bonds or different things like that. So basically bringing that kind of data and those kind of assets on chain. They are helping BlackRock with their Buidl tokenized fund, which is a treasury fund. It's BUIDL. That is misspelled on purpose because misspellings in crypto, like HODL and things like that, often come out. So that was a nod to crypto when they did that for sure. So, but yes, this is only one of the many examples Securitize has done, and they I think Buidl was one of the first. So it's I would imagine you see Securitize's name helping a lot of traditional Wall Street over the next 6 months, especially after this Clarity Act kind of really gets moving. So
who would buy a tokenized security? Like, why would you do that?
Well,
are they trying to get access to things they couldn't get access to otherwise? I mean, why wouldn't you just buy an ETF?
I think
because you couldn't buy an ETF. You can only buy it in US dollars, maybe.
That, and you only can buy it during certain hours. Everything that is currently on Wall Street right now available during 9 to 5 is going to be tokenized. I will say this with 100% confidence. Will be tokenized probably in less than 5 years, potentially even shorter than 3. And the trading will be 24/7, 365.
Off the
because it's on a blockchain.
Because I've read articles about NASDAQ in the next 3 to 5 years wanting to be completely on blockchain to have 24-hour trading.
Yes. They got conditional approval, I want to say in the last month, from the SEC to start tokenizing and running a parallel network to their traditional NASDAQ that we know. I think long term, everything's on a blockchain. You don't really think about it being tokenized. It's just there.
Yeah.
So part of it's trading access and hours. I think another part is just settlement. Now that it's disjointed, there's the whole T+1 or whatever we're at these days.
Right.
That goes to T+ or T0 because it can be atomic, and like settlement happens once you take custody, or vice versa.
So Securitize is not a token; it's a company.
It's a company running software to help tokenize, basically fractionalize an investment on a blockchain.
Okay, let's talk the next one. Ondo.
Ondo.
Ondo. Is how you spell it? Finance?
Yes. So another software company. They're helping create real-time markets in help with cross-border redemption. Ripple's done some work with them recently, and they, I think it was, if I'm not mistaken, it was BlackRock, Ripple, and Ondo, with the help of MasterCard at a conference, did the first real-time cross-border settlement of a U.S. Treasury. And it settled into a bank account Ripple held in South Korea. And I think
so who's the competition for that? Because I feel like we keep saying cross-border transactions on half of these so far.
Yeah. Cross-border can mean a lot of different things. And that's kind of like the glossing way to talk about payments that go across international. So I think the direct competitor is things that settled into dollars and were wired with SWIFT. So at some level, you don't really have to go back into a fiat currency to get across a border. It just kind of, crypto's, I guess, borderless in that sense. So it's a It's cool software. I mean, there's a lot of experimentation. So I don't know if we really tallied it in this way, but like a third of this, a quarter of this, what we talked about could not happen or happen at production scale and just kind of just goes away. But they learned something and became something else. Like that is almost certainly going to happen. What Securitize is doing, I think it makes it out the end. They probably end up being a publicly traded company at some point, like unless somebody gobbles them up, which can happen. Wall Street's getting rather big appetite for some of these crypto companies, and it's not in the notes here, but they are doing a lot of hiring the last couple of weeks. They've started posting a ton of crypto related jobs. So it's like you could felt like the Clarity Act has made progress when Wall Street said, okay, we can start hiring around this.
Right.
Not all financial advice is created equal. Coming June 10th, Everything Your Financial Advisor Won't Tell You, an eye-opening book that reveals what's really happening inside the financial industry and what it takes to build a plan that actually works. Because what you don't know could be costing you.
All right, let's talk about Fireblocks.
Another software company, so not a token here, but what they do is they help institutions deal with custody of assets. So you can think of it as software that sits on top of potentially multiple blockchains that you may own tokens in, and helps with custody around rules like how many signers have to be on a transaction, how it has to be routed, like all the business rules that you might have in traditional banking is basically what Fireblocks is doing for the blockchain. Not necessarily an endorsement. This is the custody solution that we use for the crypto fund that I run. In the end of the day, you may have heard stories or crazy stories about founders running away with keys for or people's blockchain or maybe Bitcoin or things like that. Fireblocks, in some sense, help solve that. So I put it in place for the fund because it allowed the investors to have a peace of mind. If I get hit by a bus, for instance, like there's ways for them to get back to the crypto, and it's not all lost at that point. So the kind of business rules around crypto, I guess, is the tagline they could be using for Fireblocks.
Securitize and like companies like Securitize and Fireblocks, are those investable companies or are those private? So companies still?
They're both private. So, I mean, if you're accredited, I think you can buy them on the secondary market, but yes, they are private.
Okay. Filecoin, Protocol Labs, ecosystem.
Let me say one last real quick thing about Fireblocks.
Yeah.
So Fireblocks, talk about investable. BNY Mellon is a massive investor in Fireblocks. So at some point, I imagine that gets gobbled up by them being the biggest custody or biggest, not custody, what do they call them?
Custodian?
Custodian, yes, of traditional assets. So so Filecoin, Protocol Labs is the company. Filecoin is the token. Basically, it's decentralized data storage. This one's cool. You don't hear tons about it as much these days. I think it's more of a when crypto is going well, people talk about it type situation. But if you think about a world where a lot of stuff is happening on different blockchains with smart contracts, at some level you need data storage. It can't just need access to data.
Right.
So Filecoin is basically think of it as like a iCloud or a Dropbox for the blockchain. So you can pay to store files, and basically they get fractionalized across a lot of different computers around the world. So in theory, they're always accessible and available. And you pay a fee to store it. You also pay a fee to access it. So,
and then Helium, Nova Labs.
They're basically using Helium, the token. Nova Labs is the company, and basically trying to create a decentralized wireless network across the world. Back in the day, I kind of played around with this one a little bit myself. So the idea was you'd buy this small little, look like router for your house. Your internet would plug into it as part of your house, and then it would broadcast a low frequency signal out. And it wasn't necessarily like you would go in the woods and be able to use your cell phone. The idea was like rain gauges or river gauges or stuff out that needed low data throughput, but needed access to the internet because you could use a system like this. It was cool because like the signal could travel, a couple kilometers depending on the terrain. So it was cool to kind of see networks like that. It was more of I was just scratching my tech itch a little bit when I was doing this. It was cool. Like the node that I had at my house just outside of Smyrna was talking to some nodes down in Midtown at one point and just different things. So kind of building a network. And
how did that benefit you?
The whole idea was as data would come, if there was a rain gauge or something in the area that was using it, you would get a portion of the fee they were paying with Helium token to be able to do that. Okay. It never really panned out. I think it was a great proof of concept. I think you're just fighting absolute behemoths when you're fighting an AT&T, because all of a sudden they have the towers, or they have the tower space rented. Right. They can go and put different antennas up, and all of a sudden they have the wired infrastructure to support it immediately. Right. So I'm not saying that that's happening now, but that's the mountain that they're at Helium's having to climb over. So,
all right, let's talk about Render Network, the OTOY ecosystem.
Yeah. So the idea here is there's people have computers sitting in their house, largely not doing anything most of the time, and they have a GPU, so basically the graphics processing unit, and to help people be able to render games or movies that they're developing, they could kind of pay into the system that fractionalizes that work across all the computers that are participating, and be able to kind of use it. I think it's less about games, and potentially as this is morphed, because this was all about GPUs initially. Now it's potentially more towards helping with AI models, which is everyone's talking about AI these days. Yeah. So how it works over time, I don't know. I mean, because the cards that you would buy to really train AI are so expensive and so powerful. I'm not sure what the average AI capabilities of a laptop or desktop is these days relative to that. It doesn't seem.
I think you lose some bandwidth over the internet.
Crazy as well. Amount. Yeah. So I'm not quite sure how that pans out for them, but it's another use of crypto in a non-financial form, right? Like the first, 10 of these things that we talked about were some form of finance. Mm-hmm. This is certainly in Helium before, it was definitely getting into crypto being used in ways that were not financially or not finance first. There's always that, what is the token value piece of it? Yeah. But it's trying to solve other problems, and I guess the financial aspect is more secondary. So,
all right, let's talk about Brave, basic attention token.
Yep. So you have many different browsers you can install on your computers these days. So you have Chrome, Firefox, you have Edge if you're on Windows, Safari. Brave is a version of Chrome. And what they've done is they've become privacy focused with Brave, the browser, and Brave, the token, the BAT token, is a way for you to earn. So like they would show you an ad in it. Mm-hmm. As part of that, you would be in the revenue share of that ad. You get paid in BAT token. I prefer Brave the browser personally, just because it's privacy focused. So it's shows you less ads online. It doesn't let the different websites drop as many cookies in your browser to track you as much. So I use it for that. I could care less about the BAT token, and it's purely about a privacy thing for me. But this is an example of. Gosh, the BAT token was launched, I want to say in 2020, and it was one of the first that was trying to do revenue splitting. In that case, ads with a secondary, with two different parties effectively. And there's not many of them that are still around. BAT is certainly still, I don't know how active it is, but it's definitely, I still see them trying to push it through the browser every once in a while.
All right, let's talk about Energy Web.
Basically, this is about reselling carbon credits effectively around the world, or saying you're buying energy in a cheaper place and you're using it. This is I will say a little bit of a political statement. Like the whole carbon credits and buying cheaper power in one place, but you're still using the dirty power somewhere else. It just blows my mind how it all works. Personally, I don't think I'd follow it. I just think it's kind of a bit of snake oil. But I'm not just saying the energy token itself, but just the idea that you're swapping around credits like that doesn't really seem like it's helping anybody. It's just more of reselling an asset. So
is any of that be a tax benefit to doing that? Maybe that's why they're doing it.
I'm not a qualified tax professional.
Because I would agree with you that just because you're making dirty power here and then you're going to go over there and buy a token.
So it doesn't make your power any cleaner. It doesn't
make any cleaner.
Yeah. I again, not a tax professional, so I can't speak to that. Because, there's certainly credits that can be bought and sold here in the US for different things. this is around the world too. So it's like,
Yeah.
there's no way that you would think that there's much tax credit going on when it comes to different, if I'm buying some clean power in Kenya, like
Right.
I just don't think it's happening.
Right.
Yeah.
So which one of these, everything we talked about, which one of these, or maybe there's one we missed, helps with smart contracts? I find that very fascinating to have a smart contract where,
Mhm.
I promise you a service of some sort.
Yeah.
And I'll get paid in crypto, but only after I've completed my service.
Service. Yeah.
Right. And there has to be, I guess, proof of work of some way.
Yeah.
And is that only digital proof of work, or, could you build a house? I mean,
Yeah. So, that's part of, there's a couple different questions and answers there. I think part of it has to do with, so a couple of enterprise level blockchains doing smart contracts. Hedera and Algorand come to mind. There's others, but and I guess Ethereum at some level, but I'll focus on Hedera and Algorand. So they're all about throughput. They're all about low cost transactions, all that kind of stuff. Both of those is a level playing field, I guess. I'm saying. So, part of it's like what Chainlink and what Quant would be doing is bringing off-chain data on-chain. They call them through an oracle is what they call that. And that would prove. So it could be that as part of that smart contract, there's a fee in there to pay a third party to go by and document, or take photos or something. Maybe it's an appraiser, who knows, to watch the progress of a house being built.
Right.
And then once they deem progress is made or it's complete or whatever it is, they can input that data, and then that goes into the smart contract that decides what to do. Okay, I'm making a monthly payment or a monthly draw to help build it, or okay, yes, this does convert at this point into a mortgage. Like, there's it's code you can do
pays
kind
the
of
builder or whatever.
Right.
Yeah.
There's all sorts of things, and I think you could have a full life cycle of to your example of a house being built, from purchasing a parcel to construction design fees, all the way through being built and a mortgage. You could have that as one smart contract, albeit a long one, or it's a series of smart contracts, probably more specifically, that in that world exists, or could exist. Almost certainly doesn't exist today.
Right.
But as we were kind of looking through these notes, and I was thinking, when we first started talking about crypto, 2020, 2021, I forget when we did the first podcast, everything was theoretical. There was nothing that was happening in real life.
Right.
Or very, very little, to the point where it was like basically zero. Now it's like we have all these examples and we could talk for hours. This list could be super long. And again, not that all of them will make it out the end and become, say, massive companies or blockchains, but it's cool to see the progress. It seems like it's taken forever, but at the same point, a lot of the progress that we've talked about today has happened in the last year or 18 months.
And it seems to continue building, and I think that's why we had this topic as a podcast, because I don't think people see any of this. They don't realize what's really happening.
Right. And then that's admittedly part of my thesis around crypto is the average consumer will not think that or know that they're using crypto because it's going to get replumbed behind the scenes. So businesses will solve the problem because it saves them money, increases that, or different reasons. And then I think consumers end up using crypto as more of a second wave once all the plumbing's in place, and it makes it easier to do that. Right now, it's this crypto is really just a way for consumers to gamble. So,
and that's what we're trying to get away from.
Correct. Yes.
And what will help us get away from that?
And not all of it. There's Bitcoin, Ethereum. But like any of these other more esoteric things are definitely areas where it's more speculative for sure. So.
What will help us get away from that is legislation. So let's talk about what's the latest in crypto regulation.
Yep. So,
or lack of.
Yeah, we were correct. So we mentioned that the Genius Act got signed last summer. That was for stablecoin legislation, and that was purely stablecoin legislation. And a quick refresher, that means that a stablecoin issuer, Circle or Ripple or Tether, they can have a stablecoin, but it basically made it illegal for them to pay rewards or interest on holding a stablecoin. People didn't like that, but having legislation was better than nothing, so it kind of moved forward. The Clarity Act is trying to, or otherwise known as the Market Structure Bill, is trying to bring literally market structure in rules for the road for crypto when it comes to traditional finance. What is a security? What's a commodity? All that stuff. A much more complex bill than the Genius Act would ever dream to be. So obviously there's a lot more people fighting for and against it. This is something that would have never happened in the Biden administration. Trump is very much pro-crypto, is pushing for it. And he has SEC head that's pushing for it. He now has a Fed chair that is pro-crypto, and CFTC as well. So it's going to, by putting things in law, right, it makes it harder for administration to come in, not to say it can't, but makes it harder for administration to come in and all of a sudden, decide we hate crypto again. Now that there's rules in place, they can do things behind the scenes, much like they did with trying to debank the crypto industry during the Biden administration. But it puts rules of the road in place so innovators can come in and feel safe. I think is the easy and I guess the squishy way to talk about it, because it's if you don't feel safe, you're not going to spend time or investors' money trying to build a product when you can go to a different market. And admittedly, it's AI right now. That's where everyone seems to want to go.
Yeah.
But I think that what's interesting is crossroads. AI is rather popular right now. Crypto, maybe, there's rumors that Trump wants to see this on his desk by the July 4th recess for Congress. So we should have said up front, the Clarity Act is out of the banking committee as of a couple weeks ago. It kind of got through its amendment process. Now it's waiting for a discussion and vote on the Senate floor. The House already passed their version of it last summer. So it's purely like this is the last step. The question is, when will it get done? If it gets done, you got midterms coming. There's a lot of things that could slow this down. Right. Fingers crossed it does get done. It was a bipartisan vote out of the banking committee, which is great. 2 Democrats voted for it. And I genuinely am optimistic that it can still be that way when it goes to the full Senate for vote. So, okay,
that would be very useful. Do you think that changes the price of the top 10 cryptocurrencies, or you think that has less to do with price, more of industry adoption after it comes in, or innovation?
I've long said I believe the Clarity Act to be a catalyst. It's not a catalyst for price to immediately start going on a tear.
Yeah.
The minute after it's passed. I would not be shocked to see a spike of 10 or 15% crypto. No investment advice, but that's what happened when it came out of the banking committee. It was basically the hours leading after it. It was up 10%, and now it's down 15%. So it's kind of like it's crypto, but I think it allows things to move forward to the next step, and innovators to do it. Admittedly, crypto is waiting on a better investment environment, or less geopolitics, I think. So Clarity Act plus that, I think you end up with a good crypto situation and an easing Fed. That crypto has never had a run when the Fed was not easing. So we'll see what happens with this new chair.
Yeah. Okay. Thanks, Robert. Thanks for listening to today's episode. If you're interested in learning more about Wiser Wealth Management or want to schedule a consultation to meet one of our fiduciary financial advisors, you can do so by going to wiserinvestor.com, or you can click on the link in the episode notes. You can also reach out to Robert at Teton Crypto Capital. Robert, what is your email?
Robert at TetonCryptoCapital.com.
Very original. If you enjoyed this episode, please leave us a review wherever you're listening. Thanks. See you guys next week.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This podcast is strictly for informational purposes only and is not to be considered as investment advice or solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investor advisor with the SEC. The host and/or guests may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guests of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.